It's true. Across the globe, women aren't as prosperous as men. Gender inequality is a pressing moral issue, but we forget it has massive economic implications. If you were to put all of the women who don't have access to formal financial services in one place, they would make up the third largest country in the world. That means an entire population without bank accounts, credit cards, or other tools you and I likely benefit from daily. Prosperity for women starts with inclusive policies, products, and people around the globe, and the investment to make it happen. Welcome to the Making Finance Work for Women podcast. My name is Sonia Kelly, and I lead Women's World Banking's proprietary research division. Join me as I speak with changemakers around the globe to deconstruct the social and economic exclusion women face. We'll discover new evidence together and drive action to accelerate women's economic empowerment. Because a leg up isn't a handout, it's a global game changer. Indeed. Welcome, and thank you so much for tuning into the Making Finance Work for Women podcast, streaming on YouTube and available wherever you get your podcasts. If you're listening on YouTube, you'll also be able to find additional insights and resources linked in the description of the video. You'll also see me at night because I'm recording in the evening given time zones here today. I'm the host of the show, Sonia Kelly, and I'm also the global head of the Women's World Banking Institute. Before we get started today, I'd like to give a special shout out to the sponsor of the Making Finance Work for Women podcast, Ernst & Young LLP. EY is a global leader working across assurance, consulting, law, strategy, tax, and transactions. EY teams ask better questions to find new answers for the complex issues facing our world today. You can visit their website at ey.com to explore their latest insights and services. Now let's jump into the show. Today, we're talking to a real woman entrepreneur, moving from inclusion to economic opportunity, and we might even think about how economic opportunity also turns into inclusion. If you've listened to this podcast before, you may have heard me say, I'm not actually interested in financial sector participation for its own sake. It's only interesting to me if it's improving the lives of people who use loans, savings, insurance, and payments. Now, some would say that's too high a bar, that we should just be about creating quality products. But honestly, I think we should hold ourselves to a high standard of impact. Otherwise, we're just putting out more bank accounts and more loans into the world. Before we get into our conversation, let me frame our time together with some numbers that help us to understand the economic opportunity potential of the financial sector participation of women. Women make up between 40 and 48% of the world's workforce, with the variance given that it's really hard to measure the number of women in the workforce. A lot of people are in the informal economy or formal, and there's lots of different countries, but between 40 and 48 is the best guess. Now, a substantial portion of these women are actively engaging in the productive economy as entrepreneurs. Actually, 25% of adult women in developing countries self-identify as entrepreneurs. It's a huge population, so I'd really like to zoom in on it. Now, at the same time, we know women entrepreneurs are under-resourced. There's a global credit gap for women. That's the gap between the amount of capital women need and the amount of capital they actually receive. And that global credit gap for women is $1.9 trillion, according to the IFC, and that has widened over time. We also know there are 825 million women globally who are borrowing from informal channels. So while 56% of women in the world borrowed money in the past year, only 22% of them, fewer than half of them, borrowed using an informal channel. This comes from the World Bank Global Findex dataset that came out just last year. Now, I'd like to zoom into a country. You know I like to give a specific example. MSMEs, or micro, small, and medium-sized enterprises in Kenya, for example, provide 50% of Kenya's employment and nearly 30% of its GDP. And Women's World Banking worked a few years ago with a financial institution in Kenya and found a few constraints that were limiting the economic opportunity of women entrepreneurs. First of all, accessing a business loan required multiple years of audited financials. Now, women are more likely than men to operate informally, in part because women are more likely than men to have smaller businesses. Like, it's just not worth it for them to audit their financials. So, this requirement of audited financials was limiting women's access to capital. Women were also ineligible to participate in programs the financial institution we were working with offered. So, for example, there was a CEO club for businesses receiving business loans. Because women weren't able to access business loans, they were having to access consumer loans for their business. They couldn't access the CEO club, even if they were CEOs in their own right. We also found discrimination against women borrowers. So, in partnership with the bank, we reworked their small business lending model to better reflect how women led businesses operate, using cash flow, not just collateral, pairing credit with the right business support. And we were thrilled to see this result in growth. And guess what? It also resulted in growth for male entrepreneurs. There's a quote that we got from an entrepreneur, which was, "I got a loan and it helped improve my business because I was able to repay it in a period of 2 years. If I get another one for 1 or 2 years, this can make my business grow very well." Now, MSMEs receiving loans achieved an average annualized growth rate of 10% at this institution we were working with. And I'm going to link the report below that shows all of those results. Now, these lessons give me a lot of hope, but there's so much more work to be done. In 2024, only 2.3% of global venture capital funding went to female only founding teams. That's about $6.7 billion compared to 83.6% for all male teams and 14% for mixed gender teams. At the current pace, gender parity in venture capital allocation would take until 2065. Like, I don't even know if I'm going to be alive in 2065. And with that, I'd love to turn to our guest, a female founder herself. Monika Shukla is a social entrepreneur redefining climate resilience through women-led, nature-based solutions. As co-founder and CEO of Humble Bee, which transforms sustainable beekeeping into a powerful engine for rural livelihoods and agriculture in India, she's helped thousands of women launch businesses and unlock millions in credit, turning systems thinking into real economic opportunity. And Monika's also a proud winner of EY Ripple's SDG Accelerator program. Welcome, Monika.
Thank you so much for having me, Sonia.
Monika, I always like to start our episodes by asking what your origin story is, like if you were a superhero or something. What was the journey that led you to start Humble Bee?
Right. So, when I was 26, I started my first social enterprise. I co founded Let's Endorse as a platform which enabled hundreds of very context relevant social innovations to reach the underserved geographies across India. And over time, our work transitioned more towards dignified nano and micro entrepreneurship. And then COVID hit. COVID shattered a number of livelihoods across rural and urban India. And as part of our effort to be able to rebuild these livelihoods, we partnered with one of India's largest development finance institution and several state governments to come up with a model, a tech and touch model, to enable over 6,500 reverse migrating youth in helping them launch their local nano and micro enterprises. So we help them with access to affordable credit, identification of business ideas, which are suited to their skill, their appetite, and their local micro environments, and help them, like lift off the ground. But then, all in all, despite our reaching decently large numbers in a relatively small period of time, one truth clearly stood out, and it was that entrepreneurial continuity is going to be impossible if you do not de risk the entire value chain.
Can you just explain for our audience what de-risking means?
No, absolutely. So let me give an example. In sometime in the 1970s, India went through a revolution called as the White Revolution, where a bunch of farmers were aggregated together to form a cooperative, and these farmers had the purchasing power. They came together as an institution, and today it has taken the name of Amul. Amul is one of the largest dairy brands from India. And if I if I don't want to do anything else in life, I can actually go to this place called Gujarat, particularly in Anand. I can leave everything, buy 4 5 cattle for myself, and Amul, this dairy cooperative, would make sure that my cattle get feed on time, they are insured. I would get all kinds of medical support services on time, and every morning I should be able to sell the cattle milk at the nearest collection center at fair value. So, in a nutshell, the entrepreneur here in this entire already de-risked value chain is an operator, with a lot of security built around them. So this is what we call the value chain integration, and this is something that we realized, after our effort in the area of nano micro entrepreneurship, that the continuity of an entrepreneur depends on how robust and how mature the system that hosts the entrepreneur is, right? And to be able to de-risk the value chain, you have to do deep work in a value chain and not just solve a part of it, right? And that insight sort of led me to different villages and forest fringes of India. We explored poultry, aquaculture, sericulture, lac cultivation, and then stumbled upon beekeeping. This was our bid to, map the value chains that exist across India, which could be both regenerative as well as inclusive. And in this quest, we found a very unlikely but a very profound ally called honeybees. Beekeeping, stood out for us because it was low barrier, it was land light, it was climate resilient, it was nature positive, and it was deeply invisible and undervalued in the
Mm,
current scheme of things.
mm.
Bees are so fascinating, and the amount of ecological service that they provide in terms of pollination is again, it is understated, it's invisible. But the real insight wasn't about bees, it was about systems.
Mm.
Beekeepers have been failing not because they lacked effort or will or capacity, but because the ecosystem around them was broken. If you look at the entire beekeeping and honey value chain, they are a laggard in the Indian agriculture ecosystem, and so it is in several other economies as well, right? So we created Humblebee to redesign that ecosystem and not to patch the symptoms, right? We
Mm.
made it a women first movement. So women don't just participate in markets, but own their positions in them. So that led to the creation of Humblebee.
And this is so different than the narrative that I'm used to talking about when it comes like from the financial services only perspective. Financial inclusion often celebrates reach. Like, so we talk about the number of accounts open, the number of loans dispersed. But what I hear you saying is that you're looking at value chain integration, you're looking at de risking, you're looking at kind of setting up businesses for success. Can you tell me a little bit about how that turns into lasting economic opportunities and not just like one time fix, but as you said, like a systems change? Like, what are some lessons that you would share with financial institutions that you've learned through this approach?
Quite a few actually, but let me start with your question. When women turn into producers and owners, and particularly in a model where there is a deep value chain integration and they are playing their part in that value chain, the income starts looking more predictable, the skills start compounding, and in the form of a community, that is embedded into a value chain, both risk and reward get shared instead of, them getting individualized. Right. They can also scale up dramatically from 10 hives to 20 next year, from 20 to 40. It works like a geometric progression. So a few learning that I had along the way was that financial access alone um, often turns into debt or is looked
Mm,
at as debt, right? But value chain integration turns the same financial access into asset, and assets which can not just be leveraged but can be multiplied. So the biggest lesson for financial institutions, from my standpoint, is this: um, credit only works when markets work,
Mm.
right? And if a woman cannot control production, supply chain, pricing, timing, quality, finance, etc., the access to finance is only going to decapacitate her and make her more, risk prone and vulnerable. And such kind of very siloed finance, which is not looked at in context of, her nature of business,
Mm.
it should not be seen as an opportunity. It should, in fact, as a matter of fact, looked at as a threat to their livelihoods, because one loan default and the woman is blacklisted. Nobody is going to come to her because her credit score got tarnished, and she cannot get a loan again, right? So one should actually study the value chain, understand the nitty-gritties of it, seasonalities of it, and then develop a loan product which will work, provided that there is enough market cushion and support around that woman. So
You just mentioned context, which I really want to pick up on. I feel like a lot of inclusion efforts evaluate women entrepreneurs as individuals rather than taking into account their larger context. And in some sense, that makes a lot of sense for a financial institution to do, to evaluate an individual, because they're providing a loan often to an individual. But how does context make a difference for your suppliers? Like, talk a little bit more about the broader value chain, the ecosystem, all of those things that you kind of introduced us to.
it makes a tremendous difference, Sonia. I mean, women who we work with, they do not operate in vacuum. They operate within households, within their villages, within their families and societal constructs, and within the constraints of only a handful of potential and possible livelihood opportunities, right? They cannot go out and become a fashion designer, for example, because they have to operate in the guard rails that the society has created for them in their place, wherever they live, right? So particularly a lot of these rural women who live in tribal areas, they end up taking livestock. When I take the example of beekeeping, they also need to additionally align their efforts and design with seasonality, with geographies, with ecosystems, right? And a beekeeper's success depends solely on flowering cycles, how well they are planning their migration corridor, how much is the pesticide exposure, what is their time poverty looking like, because money is not coming every month to them, right? So just to give you an example, we are working with one of the state governments, and we whosoever we sensitize and mobilize to be able to take up beekeeping, they apply for loans. And typically, without understanding the seasonality of beekeeping, the loans are disbursed at any time of the year. Say they get disbursed during monsoons, right? The woman doesn't have a mechanism to actually buy bees, make them have them make honey, and then start repaying the loan from the next month onwards, right? So there are certain of these realities, um, uh, which if ignored, uh, the products, I mean, the loan products do not become reality proof. Women don't fail because they lack discipline. They fail when the capital ignores such kind of seasonality, care work, market power, and the risk that actually sits outside the balance sheet. So yeah, I mean, I would also like to say that when you ignore this context, you tend to start misdiagnosing failure as the individual incompetence or weakness, right? And when you actually
Mm.
design for context, I mean, we have seen how women outperform expectations, right? And whenever we have seen women failing, more often than not, it has happened because the systems fail first. Um, so, yeah, so that's a little bit about context.
This reminds me of a conversation that we had a few episodes ago with a company in India, Kaleidofin, and our conversation centered around the question, like whether a credit score can be compassionate if you consider contextual factors. And we were kind of zooming in on the available climate data and talking about how a financial institution could actually use the available climate data to make better decisions about lending, like when to lend, how long somebody should have before they pay back, whether there is like a pause in repayment. It sounds like this is a lot of what you're talking about, but but not just with climate data, but with like the broader picture of the value chain and the ecosystem and the seasonality. I can even picture like a top-up loan, for example, just before, like in the month before a big windfall comes because of harvesting honey, and it kind of working like that. Is that how it works? Am I getting it right?
No, absolutely. If a banker is lending to a woman in a lean period, they have to take into account a moratorium, understanding that the woman isn't going to repay in the next 3 months when the bees are stabilizing, when they need feeding, right? So the loan product has to be extremely I mean, there should be calendars, and that too should be geography dependent, right? So, for example, I mean, India has several agroecological zones, and the rainfall patterns, the windfall patterns, migration patterns are so different from place to place. I feel that I mean, if the climate data, real time climate data, is plugged into designing what an ideal loan repayment schedule looks like for a given latitude longitude of a woman, then that would be the real magic, right?
Mm.
Currently we are trying to do one size fits all. If I say that I want to create a loan product for women which will apply equally to everyone across India, I'd be doing a disservice myself. Right, so it has to be contextual to a really sort of atomic level, and has to take into all kinds of variables to help the woman succeed with that product.
Yeah, and that's possible today in a high data environment. And now a word from our sponsor. EY applauds Women's World Banking's 45-year legacy empowering women through financial inclusion. Together, we have a common vision to build a better financial services industry, one that is stronger, fairer, and more sustainable. Find out more on ey.com. I'd like to turn to asking about what distinguishes Humble Bee. I've worked in India before, and I know that India has no shortage of pilots aimed at farmers. So, what makes your approach sort of scalable? You want to reach, as I understand, 1 million livelihoods. How are you going to be able to scale beyond like your existing women beekeepers?
Yeah, it's interesting that you mentioned pilots, because India and Africa, the continent, is largely considered as the graveyard of pilots. So many pilots have happened, and and they left. I mean, the interventions left the continent. So, um, yeah, but then the difference between a pilot and a systematic change that we are trying to introduce here is that a system change doesn't just test ideas; it rewires incentives for everyone in the ecosystem. And Humblebee's model is one such systemic change as we envision it, as we design it. It integrates production, input supplies, taking care of the entire, migration management to ensure that a woman gets at least 5 to 6 honey harvests in a year. So beekeeping doesn't just reduce to becoming a side hustle; it becomes a mainstream source of income, particularly for a farmer who currently is earning only twice a year. Right, so it's extremely crucial to have multiple, income points round the year. Um, our model also integrates aggregation, quality check on the spot, technology by using a lot of vernacular, visual, and voice, access to right kind of
Hmm.
finance, which we are currently struggling with, and we have to solve for this, and access to fair forward markets, and all of this tying together into creating one operating system for scientific beekeeping that really works on the ground. Right, so we are trying to create an altogether new sort of system for scientific beekeeping and bee-led pollination. It's not just about honey. The impact of bee pollination on agricultural GDP is going to far outgrow the honey numbers, when you look at the absolute
Oh,
contribution. Yeah,
yeah.
totally. Indian farms are severely under-pollinated. The bee population has been on a decline worldwide, and it's time to bring bees back. And this will create a virtuous cycle where, more bees would mean higher yields, healthier crops for a small farmer, that is resilience, and for our food systems, that is security. So we need to create these kind of, reinforcing positive, climate positive models, for more and more people to also take up regenerative farming and bee friendly farming.
Mm. And that's a whole nother layer of that sort of systems thinking is
It
thinking
is,
about
and
how it
so
yeah.
exciting. So exciting. Yeah.
Mhm.
And to be able to scale without breaking, as you asked, three things actually matter a lot to us. One is standardization at the core. As much context is important for us, standardization is equally important in certain parts as to how bees are, getting managed, how do disease diagnosis happen, what are some of the non-negotiables, how will we ensure quality, so there are absolutely no compromises made,
Mm.
when it comes to standardization of certain aspects. The other, as I said, standardization lies at the core, but then flexibility and hyper contextualization always, lies at the edges. And the third thing is institutions and instruments, which can move at biological timelines and not bureaucratic timelines. Right. So these are the three very important, things that matter to us: standardization, contextualization, and moving as per biological timelines. And to your question of scale, you don't scale by adding beneficiaries rapidly. You scale by fixing infrastructure,
Mm.
and that's how more and more beneficiaries will get added, themselves into the value chain.
Mm.
Yeah.
One thing I'm noticing in this conversation is you're not referring to the women that you work with as borrowers. You have referred to them as regenerative farmers, as beekeepers. We sometimes talk about women as producers, as economic actors, and not just as borrowers, account holders, or end users. How does this mindset shift how does this mindset shift force us to rethink success metrics? What should we be measuring if the real goal is economic opportunity and systems change?
Wow, beautiful question. We should actually measure the stability of incomes, the number of income cycles, um, asset ownership, productive asset ownership, uh, pricing power, the ability to reinvest without distress, and also collateral benefits. As I mentioned, pollination leads to direct yield improvement. In fact, markets should be able to reward the ecological values these women beekeepers are adding, by offering them with financial incentives, by offering them with subsidies, with interest subventions. So here, I mean, that's how a powerful, sort of woman who is financially included look like, right? Agency any day would matter so much more than just access. And if a woman is plugged into a robust enough value chain, she can negotiate prices, she can be resilient enough to withstand a bad season, she can plan long term, and that is where the real inclusion lies.
I love that. And that's a really beautiful answer to what I shared in the introduction, which is that I'm not interested in financial inclusion for the sake of more loans going out into the world, but rather for the sake of what it achieves. And you just gave such a beautiful articulation of what it achieves: stability of income, asset ownership. You talked earlier about like compounded skills, risk sharing, and win sharing among the entire value chain. I'd like to end with a couple fun questions. The first one is, what do you want to see in the world as a result of your work?
I think you've already stated this, Sonia, and I very much resonate with that. I want women, to be seen not as beneficiaries of development and impact capital, but as partners and architects of, eco restoration and, climate resilient economies themselves. And I want markets to reward regeneration, which is non extractive in nature. And if we get that right, livelihoods, climate, and food systems will all start healing together. And I can say that because I work at the intersection of, all of these. We need the right systems, the right kind of finance at the right time to have women build the future of resilience, and that's the change that I want to see.
That's beautiful. And I can see why you're an award winner as well. And finally, a personal question. What is your favorite way to consume honey?
Well, I have many favorite ways. But I like my honey simple, raw, and unheated, 1 spoon every morning on an empty stomach. I have recently started experimenting with what I'm calling, a fire honey. I'm
Oh,
going to, rename it someday soon. But it's this raw Pongamia honey, which is mixed with black turmeric, which comes from northeastern hills of India, very rich in curcumin, black pepper, cinnamon, and ginger powder. The
Oh,
kind of
wow.
immunity and warmth that it provides in cold regions. I mean, I live in tropics, but yeah, I still like the feeling of, this warmth that it provides. So yeah, so that's now become my second favorite way of consuming honey. I'm gonna call it ember, maybe. Yeah.
Ember. Oh, I love that. Our listeners heard it here first, Ember, and everyone's going to be running to their local shop for it. You're making my mouth water.
Yeah.
So I think we need to end this conversation so I can go get something to eat. But it has been such a pleasure to have you on the show. Thank you so much, Monika, for sharing your story.
Well, thank you so much, Sonia, Ariane, and everyone at WWB team and everyone who's tuned in to find this particular podcast interesting enough.
I hope you enjoyed that conversation as much as I did. I have delightful notes. I especially love the way that Monika phrased things. She talked about women as architects of ecosystems, regenerative farmers, as well as beekeepers, obviously. She also, in my notes, I have this great note. She said, oftentimes, I'm going to get it wrong, but hopefully you'll get the gist. Oftentimes, loans become just debt. It just creates debtors. But we want financial access to turn into assets for people. And that means value chain integration. That means de-risking. That means like all of these other things that might come along with financial services. We also learned what de-risking is. And that was a really helpful example that she gave us for that. And then she talked about the real magic. Like that would be the real magic if everything kind of came together, recognizing that the success of women who are economic agents depends on all of these various factors around them, depends on their context. And in the case of beekeeping, depends on seasonality, it depends on the ecosystem, it depends on the migration of the bees, which is something that we can't always control. And so there's so much to do to manage that. And if you can really harness all of that context, can create systems change. I love that. We like to talk at Women's World Banking about how economic opportunity is fueled by financial inclusion, and it can't happen without you. If you don't know where to start, you can view us here at Women's World Banking as your pathway to impact. So go ahead and donate or partner with us. You can visit our website to find out how. We actually just celebrated reaching 117 million women and 76 million men, because as I shared, the products that we build are not just ones that women take up, but that men appreciate as well. We did this in the past 8 years alone, and the work is far from over. If you have any questions, shoot me a message on social media. I'd love to talk with you. And if you found today's discussion valuable, please don't forget to subscribe, to rate, to share it with your friends or colleagues, to grab the phone of somebody off the table and subscribe them to. And you can leave a review on your favorite podcast platform. Your feedback really matters to me, and it helps us to bring you the content that resonates. So please stay engaged, stay informed, and we'll see you next time.